Hey everybody, Boris Nas from BK Forex. Welcome to our weekly Forex technicals for 7/29/802/13. Will the dollar recover? As always, please take a look at our disclaimer to make sure you understand that trading Forex on margin carries a high level of risk and may not be suitable for all investors. And we ask you to seek advice from a financial advisor if you have any doubts. Read this disclaimer very carefully. Well, next week brings a slew of economic data to the table. We have obviously the Fed meeting and the NFP data and the ISM data and just all sorts of measurements of the economy that should give us a much better clue as to whether the dollar rally, which at this point now has turned into a complete dollar rout, is going to continue or not. The dollar has definitely come under tremendous amount of weakness ever since Chairman Bernanke communicated the fact that they're not necessarily going to taper in September. This has been the taper rally, as everybody has assumed that the dollar is going to continue to essentially appreciate as QE goes away. But QE doesn't seem to be looking to go away. And this week is really going to be a key tell because we have the Fed meeting. We'll see what they have to say at that point. And then after that, we'll have the economic data points from the NFPs to see if the economy is slowing down in any way, shape, or form. So for the time being, the Euros had a big, strong rally. 33 seems to be capping the rally in the near term. But a break here, obviously, as we talked about, it took out sort of the last of the resistance here at 32.50s. It's hanging tight at the 33s. A break here opens up the run to 34s. And then, of course, that becomes a much more interesting proposition because if we do have a situation where we have weak NFPs and a relatively dovish Fed, it's very conceivable that we could bust through this 34 level and essentially go to fresh highs that we haven't seen in a long time. As a matter of fact, I think I'm going to need to go to let me go to the weekly session. See this? If we go back to the weekly charts, where is this? This is, yeah, let's go to the information window. Let's see what date is this. This is like beginning of January. We haven't been at above 35 since January. So this whole potential of a massive breakout into the 35 level is a really interesting possibility next week if we get an inkling that the U.S. monetary policy is going to stay very accommodative for quite a long time. Because on the flip side of it, we're also starting to see a pickup in European economic activity, and that's giving a little bit of a boost to the euro. So really interesting setup this next week as a lot of the data and a lot of the policy comes to the fore. Similarly, very similar story here. If you look at the weeklies on the dollar yen, we clearly failed 150. Now we breached the 98 level, so far bounced back off of it. But a move to the downside here really opens up a run all the way out to 95s. That's one of the key things that I think is very interesting. If you look at the weeklies, there is really very little support here all the way through until the 95s, especially if you get this continuous assumption that the Fed policy remains very accommodative for quite a long time. So well worth watching. I don't think the dollar yen is necessarily going to have as much acceleration to the downside as before, simply because the Japanese part of the equation may seem to offset it. But I do think that there's still downside pressure here. And certainly from a technical point of view, the fact that we turned down, the fact that we have a lower high, all of this really bears down. And the fact that we're pretty much closing at the near lows of the week, all of it bears on dollar yen to the downside as we start next week. Next, cable. Well, cable is sort of a derivative of euro, which is this 54 level now was kind of the intermediary level of resistance. But really, if we get an anti-dollar rally, this really pushes us all the way out to 56, 57, the highs over here in cable, as it just simply gets the benefit of the anti-dollar flows. And then the Aussie, of course, it really struggled very, very hard, continues to struggle here with this 93 level, but at the same time, really holds well above the 91s. There isn't any data on the Australian side that matters much next week, so it's really going to be pretty much anti-dollar flows. But if basically you get weak U.S. economic policy that is sort of accommodative Fed policy, and the growing consensus perhaps that the RBA is not going to cut rates, then this 93 gets busted, and we really have a clear path to 94, perhaps even 95. Just simply on anti-dollar flows alone, not necessarily because Aussie is a super buy here, but just as a short covering mechanism as the late shorts get squeezed higher. So definitely worth watching. This is the weeklies. Let's take a look at the dailies. You can see on the dailies how the 93 is such an incredibly powerful cap, and how a break above 93s could open up a much bigger run on the Aussie side. On the crosses, there really isn't too much interesting action. Well, sorry, let's take a look at dollar cat. Dollar cat, of course, the other trade that's been trading well here below 103s, and a weak U.S. data report. That is weak U.S. NFPs, and perhaps a more accommodative Fed could push us all the way down to 102s as we, and maybe even into the 101 category in a dollar CAD trade. Aside from that, on the crosses, there's little really definitive action. Euro pound is kind of marking time here. Where's my euro pound? Euro pound is sort of just marking time here with a slight bias towards the euro. And if we do get a sort of a major realization that the Fed is going to stay dovish for a while, there is a possibility that the euro will outperform cable, and you could get the euro run perhaps to 86.50, perhaps back up to the 87s. But it's really consolidated phase here with just a slight bias towards the euro. And the other interesting trade here is euro. Let me just find this out. Euro yen, which is coming off clear. This sort of a double top formation around 133 is not really holding it, and this is really a function of yen weakness. So we get further, yen strength. So we get further yen strength. There's clearly a possibility here for us to maybe run all the way down to 29s, perhaps even 28s. Similar kind of a story where we talked about this in the chart of the day yesterday. The pound yen was making a double top at 154s, and indeed it made a double top at the 154s, and now it's coming back down to the support of the 150s. Overall, it's not like we're really carving out fresh territory on the crosses. It's basically up range, bottom range type of trading, but it's worth watching the crosses around the edges because there is some opportunities on one side or the other side. Last thing that's kind of we haven't really covered on the crosses in a while, that may be worth taking a look at is I think I'm going to have to do this manually, is Euro Swiss. Simply because that's had a little bit of a turn here to the downside. And now we're coming up to this really key support level, this 123. So again, dollar weakness would push dollar Swiss to the downside, could push us perhaps all the way out to 2250, maybe even 2200. So what we're worth watching here. This is a clear distribution here. Higher high, lower high again, more downside pressure. So break at 2300 really does open up a run towards 2250. So these are sort of smart, small around the edge type of trades. The really big story is definitely going to be in the majors. Really important to watch the euro. Important to watch the yens and pound and the Aussie. Aussie 93 is the breakout. For the euro, 34 and higher opens up fresh territory to yearly highs. And for cable, 54.50 or higher opens up the run towards 57. That's how the week shapes up. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg for BK Forex. Over and out.